Good evening, everyone. Welcome to Canada Facebook, IQI Canada Facebook Live evening talk. Today, we are going to talk about residential mortgages. To discuss residential mortgages, we have our special guest, Nonica Sarin. She is the mortgage development manager with the National Bank of Canada. Welcome, Nonica.
Thank you, Junaid. Thank you for inviting me on board on the IQI Live for today's session. I hope the audience will enjoy it and the information will be very informative and will assist you at the end of the session. So I will quickly and briefly introduce myself. My name is Nonica Sarin. I am the mortgage specialist with National Bank of Canada. Now finished 10 years with National Bank, but I have been in the corporate sector doing mortgages for the last 15 years, previously with other institutions. So yes, that's my background. I really take pride and passion in what I do. And I hope that today's discussion with Junaid in collaboration with IQI, which is one of the best realtor firms I've worked with, we will bring more value to our clients after the discussion.
Amazing, Nonica. Thank you for your introduction. Thank you for the kind words about IQI. As I said earlier, that Nonica has been a great help for our clients in terms of residential mortgages, giving her expertise and knowledge. She always add value and provide solutions. So today, for the benefit of audience, we are going to talk about few things which involve in the residential mortgages. So Nonica, let me begin with asking that any residential mortgage, especially a place like Canada, where a lot of newcomers are migrating from different countries.
Yeah.
So, can you please give us some understanding about what is the program which is there for the newcomers for the in the residential mortgage?
Well, what I can say is Newcomer is one of the best programs the financial institutions in Canada has, because Canada is a land of immigrants, and now we always encourage immigrants to come here. So we want to have specialized products that cater to their immediate need, which is first they want to buy a house as soon as they come to Canada. So for that, the Newcomer program is very, very helpful, and there are different types of newcomers program. They can be classified into two different programs. We have one set of newcomers that first come to Canada on work permit only. So they may not have a proper social insurance number when they come to Canada. They might be only having a work permit. And the way we classify these type of clients are that their social insurance number usually starts with a 9. So these are the characteristics of clients who come to Canada. First, they have a work permit. They are employed in Canada. Second, their social insurance starts with 9. They do not have a PR status at the moment. So we do assist financing for those type of individuals. Then we have a second classification of clients under newcomer, where they have their PR card, which is a permanent residence card, and their social insurance number at that point does not have a 9 starting number. They have the normal social insurance number. So they are also classified under permanent resident newcomers. Both criteria for approval for both of them is the same, but majority of the banks in Canada, they do not like to finance people who are temporary residents, who we call the ones who only have work permit. They're classified as temporary residents. So but we take pride at National Bank of Canada, and we do cater those type of clients as well. Those are the two broad classifications. Now, somebody would ask me, besides this, what is the definition of a newcomer? A
Very.
newcomer is a
You you you
person.
you took my next question, so thank you very
Yeah.
much.
So the definition of a newcomer is, banks, when they check the credit report of a client, they basically look at the date the credit report started in Canada. So let's say somebody came to Canada, maybe, I don't know, 5 years, more than 5 years ago, but their credit report started less than 5 years. So the definition is anybody whose credit report start date is less than 5 years in bank's eyes is considered as newcomer. Okay. But most of the time, newcomers have to be in Canada less than 5 years for them to be eligible for this program.
Perfect. So So you define the newcomer who has got a credit history of less than 5 years. So what will happen to those newcomers or the new immigrants who just landed a month or 2 months or 3 months back? They don't even have a credit history because credit score only come into play when you spend 6 months and you have certain things. So what are the options available for those type of immigrants who are only here, or maybe there are certain clients we have who are yet to come, and they're already looking, asking us questions how they can help them buy the home. And to anybody buying a home for new immigrants, a mortgage is a critical factor. So how we can help them, those sort of people who only landed here, or maybe you haven't landed here yet.
Yes. So, see, the typical unique feature of a newcomer is they will have limited credit or no
Mm-hmm.
credit.
Agree.
So, Junaid, as you said, if they are just 6 months in Canada, maybe they haven't applied for any credit card or anything. So that means they have limited credit history. So yes, bank is receptive to that. Or people who have established credit, once they come, they find a rental property. So there are credit checks done on them. So, when the landlord does credit checks, it creates a credit report profile. So they necessarily don't have to have a credit card in order for their credit report to be activated. So even let's say they want to come, they are 2 months here and they want to buy a car. So the car leasing company or the finance company, they will run the credit check first. You see, credit check in Canada is like a Bible in Canada. So it's like our certificate, like our individuality certificate in Canada. Everything starts from a credit report. So people with no credit but still landed in Canada either on a work permit or as a permanent resident are still eligible, versus people who have limited credit and less than 5 years are also classified under the same program.
So just for the benefit of people who are watching us, who are new immigrants or who haven't landed here, IQI real estate with the offices in 17 countries, there are a lot of clientele who are already approaching us and asking us questions how we can help them uh, to buy the home. And the first question is how can they help them with the mortgage? And of course, we work with you in a lot of instances where you provide assistance to those newcomers and even the existing people who are already living in Canada. But the question I want to ask is that what are the few things a new landed immigrant does? You always tell me that you should ask them to apply for a credit card, take that phone. What are those things they should do as soon as they land here in Canada?
Okay, so depending on the objective of the client, because Junaid, I know you deal a lot with overseas clients, and I know a lot of realtors like you do, and you always ask me inquiries because when you establish rapport with these clients, your objective and my objective is pretty much same, that we provide the most information so that they can plan smoothly the things going
Mhm.
forward. So, what we go through is a pre approval process or the criteria, which is very, very crucial. Especially, Junaid, you know how the market in Canada is these days, right? So, what are the challenges the buyers face in today's market, which is a seller's market, and how we can help the client to make their process more smooth by giving them more information and guiding them step by step. So yes, if they are not in Canada yet, the step would be that we guide them what things to do. So for that, we provide them information document checklist that if you are looking to do this, we inform them via document requirement and the steps involved in order to get a pre-approval on a mortgage. Uh, that is one informative coaching you provide to your clients in collaboration with us at the bank, right? So that
Exactly.
is one thing we do. Now, when they come to Canada, they don't really have to have a credit card for financing of a mortgage purpose. As you said, they might not even have a credit report. It's okay. For a newcomer program, having a credit card or a report requirement is not a must, so that's fine. But yes, we can make things simpler and easier for them, because when they come to Canada under newcomer, the most important thing is they have to have a job. Okay, so that is the most crucial part in the newcomer program. They have to have a job and they have to have minimum 5% down payment. Okay, so there are two categories of newcomer financing. Now I'm going to go into detail on that with you. So the prerequisite is employment. They have to have a job letter. They don't have to qualify based on the income they make. That is the beauty of the option one of a newcomer program, whereby they can put 35% down payment. They have to have an employment in Canada, but not necessarily they have to have enough income to qualify. As long as they're working and they have 35% down payment of the purchase price they are aiming for. Second thing, they have to have at least 1 year worth of mortgage payment plus property tax in their Canadian bank account. So these are two crucial things for somebody under the newcomer program who comes in and applies for financing. The maximum financing allowed under newcomer program is $1 million. So there's a
Okay.
benchmark.
So
Okay.
it's a good to start, good to know that any new immigrants, whether they have landed or not yet landed, it's always
Yes.
good to plan ahead of time. They should
Yes.
always contact the realtor and the mortgage advisor. In our case, IQI with offices in 15 countries, we have offices in Canada. People who can watching this program can see those numbers, to connect with us, and they can always connect with Nonica wherever it requires. And the idea is to we do the initial sort of assessment with the help of Nonica. So Nonica, we can save Nonica's time because she's very busy in lot of managing a lot of different responsibilities she has. But of course, we work as a partner and team. Now, that's you talk about the first time home buyer or the new immigrants who is coming here. So, of course, every immigrants that come here, they have enough savings. Now, with the current market trend, as you just mentioned briefly, that is seller's market, and a lot of times the sellers want to see buyers to put an offer which is firm offer without any financing condition. It used to be the case where you can get 4 or 5 days to get your financing approved, but now we sold yesterday one home where we have all the offers always come as a unconfirmed offer without any condition, right? So in that scenario, what do you think the buyer should be doing to make sure they should be able to put in firm offer for the home they're buying?
See, you said it well, Junaid. Right now, there is a multiple offer scenario in the market, right? There is limited inventory of houses and a lot of buyers. So what that creates is it creates a bidding war, and it creates a multiple offer scenario for the buyers. The highest bidder gets the house. And
Exactly.
most of the time, there are two criteria when somebody gets the house. It's based on number one, highest bid, and second, going without conditions, correct?
Yeah.
So, highest bid is a situation where Junaid can coach the buyer as to what is a reasonable price, and you are an expert on that.
Exactly.
I show my expertise on the financing side, whereby I can coach the client to do the homework first. And the homework is to connect with a mortgage specialist through you, so they can discuss this requirement with your office at IQI. You can pass over the information of the client contact to myself, and then I can connect with the client to set up a pre-approval appointment, whereby I go in details for the pre-approval steps to make sure the client is doing whatever is necessary for a smooth financing, and that creates a good scenario for a buyer. Once he has the pre-approval in hand, he can go firm on the offer. So it saves a lot of aggravation, like losing a house just because you don't have a pre-approval in place. So you have an edge compared to other buyers once you have an approval in hand. So I guess pre-approval is a very important tool. And also it is good for the peace of mind for a realtor, as well as for the peace of mind for the buyer, so that there is no last minute surprises and hiccups then that can create a bad experience for yourself and as well as the buyer.
So very well said, Nonica. So what you are saying that anyone who's looking to buy a house in a primary market, and they're looking and aiming, working with realtor, aiming to put an unconditional offer, which is without any financing condition, they must talk to the bank or the mortgage specialist like yourself to make sure that they have approval in place ahead of time, and they know what the numbers they're looking for, what sort of mortgage is available, what sort of amount they can put in firm offer, so they should not have to worry about later on. And of
Correct.
course, the final approval come later on, but they have a confidence based on their pre-approval which allows them to be able to put that offer. Amazing. I think we have two people have joined. Thank you for joining, Yusuf, Irami, Yusuf, as you know, our IQI Canada head, and Kashif is also joining from Malaysia. Yusuf has a question, which is
Yes, go ahead.
basically around what about the is there any pre-approval for the pre-construction for a single home?
Yes, we do pre-approvals for the pre-construction. The only difference is you have to remember pre-construction units or properties, they could take 1 to 2 years to 3 years to be completed. Pre-approvals, so I'll tell you the difference. Pre-approval is good for 120 days. So the amount of mortgage and the rate guarantee on a pre-approval is valid for 120 days. When you talk about pre-construction, those are longer projects. They can take from 1 year and over 1 year. So there is something called a builder cap program. So that's not actually a pre-approval, it's an official approval. There is a difference. So when you go for properties where it's a pre-construction, then I would encourage that you take an official approval. Number one, because of the tenure of validity of that approval, and second, it's a more official approval, and it protects the client against the rate rising. So it gives you a longer rate guarantee. So it can be done. Now, different banks have different builder programs. Some banks have 3-year builder programs whereby they guarantee the rate and approval for 3 years maximum. Some would have 24 months and some would have 1 year. With National Bank, we do have a 1-year builder cap program. So I would suggest that if you have clients like that, to get a official approval for such clients under the builder cap program.
Sorry about that. In terms of the residential mortgages, um, let's suppose we have people who already have a home, who bought it like 5, 7, 10 years back. How and they want to invest or to buy another home as an investment opportunity, right? What sort of options do they have?
That's an excellent question, Junaid. And I go into those scenarios a lot every day. And actually, you know what it is? It's like people who sit on a gold mine, but they cannot encash the gold mine while sitting on it. We call it leveraging on your own assets, in short words. So, what I would suggest is that, we are in a low interest rate environment right now. There are clients who have multiple properties, or even if they don't have multiple properties, maybe they have a principal home whereby the mortgage is paid down to under 50% loan to value, let's say. So their property now is appreciated, and the loan to value, that means the outstanding mortgage on it is very less. So they are thinking, okay, I need to buy an investment property, but I don't have the down payment. What should I do? Right? So they have the down payment, but it's just tied up in their house. It's just sitting in their house. So we educate them that there are ways to do it. And that is by refinancing their current asset. They take out the equity from their house and they invest it into the projects they want. It could be to help their children. It could be investments for their own self. So this helps them to diversify their wealth. And that is achieved through refinancing their existing assets if they have equity built up in it.
Yes, I think it's a very good solution you provide that you have an asset and you've been living there for the principal home, and you have been paying your mortgage, and then you can use that to invest another property. So let's suppose I can get the down payment from refinancing the current home, but how do I get a financing for the next home?
Yes. So our job here is not to just do a mortgage, but to provide them solutions. And Junaid, you do this day in and day out, right?
Yes.
So you provide them investment solutions. You provide them different ways how they can benefit out of what they have and expand their wealth. So same way, when we do the pre-approval calculations, again, the pre-approval ties in here as well. So when we do preliminary number crunching with the clients, we first understand what is the objective of the client and how can it be achieved. So we work out different scenarios. So let's say the client has some cash, but they don't have enough for the down payment, or maybe they want to put a smaller down payment and take a bigger mortgage because the client thinks in one direction. So our job is to broaden their scope of thinking and guide them with other better options. For example, they could refinance their existing home, take out more in down payment. This way, they can take a smaller mortgage on the other property, and we do the number crunching in a way that it works out, right? So, only when we crunch the numbers, we can provide a solution to the clients like that.
Great.
So,
So
we
I
assist
think
on both sides. Yes.
amazing. Thank you very much. I think it's a very great solution, and we have used it for a number of clients along working with you, and people have benefited. I think you also mentioned briefly about the lower interest rate, right?
Yes.
So those, like in the same example, when people have a house, who bought the house 5 years back, 6 years back, 7 years back, at the time, and now the mortgage has come down, the house values have gone up. But there's one more point you always mentioned that in those days, interest rate was 3%, 3.5%, 4%, right?
Right.
Now the interest is lower. How does that help people to get more mortgage? Because not only about the equity, but also lower interest rate also helps them, right?
Yes, the lower interest rate helps them from the cash flow perspective, right?
Mm.
So the most important thing in a low interest rate environment, see, if they are using the funds to invest, from the taxation point of view, when you use the funds to invest, you can override the cost, which is the interest costs.
Yeah,
When the interest costs are lower, it creates a lower monthly payment for the mortgage. So it fits very well in the client's budget, right? Especially when you are working with limited funds. So low interest rate environment helps in that. Now, so mortgage is one solution, but there are some clients, Junaid, who probably at the moment don't have any plan to invest, right? But
true.
they might have a plan in the near future. And let's say their incomes are reasonably good and they have good equity in their houses. We have a product called All in One, which is basically a home equity line of credit. It doesn't cost the client to get that, but it opens avenues for the client to use the funds from that secured line of credit for future investments. And those are interest only. Now, if the client said, well, I don't want to pay principal and interest, I have a good cash flow, but I want to keep my payments at the minimum, which is interest only, is the option for
Mhm.
them. But at the same time, I want a flexibility to prepay the principal whenever I want. This way, I can reutilize those funds again. So for them, secured line of credit is a very good solution, right?
So
So
in equity line of financing, you're saying that there's no prepayment penalty. If you can pay off anytime, there's
no,
always.
because home equity line of credit is a revolving open product.
Hmm. Hmm.
So, and the good thing is it's interest only. People who are business minded and investors, it's a very good product. It comes in handy for them because they don't have to think, oh, how much I need to prepay. It's open. They can prepay whenever they want. If they want to sell that property at one point of time because they have a secured line of credit, they don't have to worry about penalties, right? So, I guess it's not for everybody, but whoever it deems approvable for, it's a good product and a good thing to have. You might, so it's
You raise a
something you
very
might not need right away, but at least you have in place.
Nonica, giving your depth of experience and knowledge. I think we know that it's always good that for the benefit of the audience that whoever listening to this and watching this program, will now or later on, please note that this program is only for the public interest. If you want to take an expert advice, please get in touch with the expert in mortgage. You can get in touch with the IQI team. You can get in touch with Nonica, but make sure that you first talk to them, keeping in view your specific circumstances because everybody is different. So when you talk to Nonica, when you talk to us, we always provide you a specific response to a specific question in your specific circumstances because everybody is different. Everybody has different need. So it's also important to talk to an expert like Nonica to get you a right solution for your problem.
Yes, that's great, Junaid. And Junaid, you have a wonderful team at IQI, and you are omnipresent almost in a lot of countries. So it's a pleasure for me to work with you, okay, with the team of your office, and the clients and the audience can contact you directly, and you can then reconnect those clients where you think my service is required, and it would be a pleasure for me to assist you. As you said, everybody has a unique need, so we have to cater and tailor the solution based on everybody's unique needs.
Perfect. See, the we always talk about and discuss different scenarios, right? Now, one last thing I would like to take your view on is that what do you think about the interest rate? A lot of people are asking right now because interest rate moves up and down. So, I know everybody's circumstances is different, but if you were to give an advice, your personal view, what do you think about the interest rate right now?
In my 15 years of financing experience, this is the rock bottom in fixed interest rates we have hit. And you know, when we hit the rock bottom, there is no way but to go up.
Yeah.
So the bond yield rate is going up, and that is what's triggering the fixed rates to go up. It's actually gone up 3 times already in the last 2 weeks. So interest rates on the fixed side will rise for sure, but variable is going to still stay stable. It's not bad. Variable rates are pretty good. I remember when fixed rates were higher, people were mostly doing variable because in my last 15 years of historical trend, I have seen that people have always benefited staying variable, to be honest with you. Two reasons. One, the interest fluctuates. So, and most of the time, Bank of Canada fluctuates the interest rate based on the economy of the country. It has nothing to do with the bond yield rate or anything. So people have a general perception, oh, the fixed rates are going up. Does that mean the variable is going? No, they are not interconnected. Okay, they have nothing to do with each other. So one is based and decided because Bank of Canada reviews the interest rate policy every month. So they sit and talk and discuss how the economies. There are a lot of factors involved in the prime rate calculations that is decided by Bank of Canada, whereas fixed rates have totally different perspective what affects them. So variable rates are pretty lucrative right now, and I think they will stay lucrative for another 2 years till we sort out the corona problems and the issues and what's going on in the world. But fixed rates definitely will rise.
Perfect. Amazing. I think you have a very good perspective of the interest rate and overall market. Nonica, I would like to thank you again on behalf of IQI and appreciate for your time and your in-depth knowledge you're sharing with our audience. I think we are looking forward to see you again. We'll continue to have those series of maybe once a month with you, where we're going to talk about as mortgage and different topics. And we appreciate for your time. Thank you very much.
Thank you,
And
Junaid. Thank you for inviting me, first of all, and Yusuf as well. Yusuf is the broker of record, and I know he's behind the scene, but he's hearing me somewhere. So I really, really take pride in representing and working with you. So it's my pleasure.
So with that note, everybody please stay safe. We have seen a third wave of corona, so please have your mask, stay safe, and keep a distance. And good night, everyone. Bye bye.
Bye bye. Thank you.